Don Luskin. I think you've become, Don Luskin, our biggest bull of all bulls. So where do we go here? Profits looking sloppy. Today's consumer looking sloppy. The key indicators for recession, either flat or slightly down. You got your work cut out for you, bud.
Well, you know what? I think one of the main reasons I'm the big bull around here is because everyone else has deserted me. I'm the last bull standing. You know, here's something for your Kudlow 101 recession watch. I think really tells the story. If we're in a recession, it probably started in December, if. We're running, you know, what, the last payroll jobs report was, I think we lost 40,000 jobs that month, and jobless claims are running at about 350, 360,000. Normally, when you're 3 months into a recession, jobless claims are 550,000. Normally, payroll job losses are 250,000. I call this, if this is a recession, this is a jobful recession. Remember the jobless recovery? This is the jobful recession. And why? Because this is history's first easy money recession. This is the first recession that we will have gone into without the Fed having cranked up real interest rates to contractionary levels. And the instant there started to be any trouble at all, they've lowered them, and real rates now are negative. So fine, if we must bow down and say, yes, we're in a recession, it's going to be a shallow one, it's going to be a short one, and we're going to come out screaming.
All right. Where do you come out on this update? Sort of a dreary week for stocks, a dreary week for a dreary quarter for stocks, and even I can't get much better than a flat GDP. Go ahead, John.
Well, it's certainly dreary for those that are long the market, very good for those that are short the market, with ETFs, some of them, QID, for example, up about 31% and change. Where I disagree with Don is that he says job full recession, but of course most of the jobs are being created by the government in the consuming sector. They're not really productive jobs. Industrial jobs are falling quite heavily, and that's the really underlying threat. And I think the underlying key to what I see as a recession and what's going to make it much worse is, of course, what Secretary of State Paulson says very soothingly is deleveraging. In the residential real estate market alone, that deleveraging could be about $12 trillion. And
hey, John, wait a second. John, you're just throwing numbers around like crazy. There's some fund that's up 30%. We're going to have $12 trillion in deleveraging in real estate. Let me say. There's only $10 trillion in real estate debt in this country.
One at a time. Don Luskin, you first, and then back to...
How do you have $12 trillion of deleveraging when there's only $10 trillion of real estate debt to begin with?
No, there isn't. I mean, if you look at Schiller, Robert Schiller of Yale is probably the
look at the Fed's flow of funds report. I've got it open on my laptop
authority
right here.
on real estate. He's the most respected authority on real estate, and his 40% over trend line equals $12 trillion.
Bright spot, Don Luskin. Transports were up in a dreary week. Transports are up 1%. Now, that is a harbinger of future economic growth. Since the Farrell bottom in late January, transports are up 14%. That's a big number, Don. And I'll tell you what, since the market peaked last October, transports are only down 5%. So what do you make of that? Because that, I think, I've been watching those transports very carefully. You can't have a continuous drop in a bear market unless the transports confirm it, and they ain't confirming it. And maybe I'm hanging my hat on a slender peg, but I have done that before. That's a British hat, a lock hat in honor of John Brown. Go ahead, Don Luskin. What's transports telling us?
I think you've got it exactly right, and I could point to other things that are telling you a similar story, like copper prices. If we're heading into a U.S. recession, then we're certainly heading into a global recession. You wouldn't see copper prices being as strong as they are. You wouldn't see Baltic dry shipping rates as strong as they are. I mean, I could just make you a list 100 items long.
But Don,
another thing you can look at is you can hang on. Another thing you can look at is you can look at the way risk spreads have come in the last week. Look at the way junk spreads at
We've got some spreads.
Spreads on leveraged loans.
As you're talking, we're going to put some spreads up on the board.
This incredible relaxation of this end-of-the-world spasm of risk aversion that obtained 2 weeks ago when it looked like the mouth of hell was opening. We were all going to join hands and jump in, and we decided not to jump in. Now, you know, we can look to a world where systemic risk has been cut off by the Fed, and we can now start having a reasonable conversation about how we're going to recover from this mess we're in.
Luskin, you out there? Where's Luskin? Are you one of those squishy? Are you one of those squishy Republicans that wants to regulate and help homeowners to make mistakes, or are you willing to repeal the Community Reinvestment Act, which put a gun to Countrywide and other lenders and said make bad loans?
That's not true.
Yes, it is. That's what the Community Reinvestment Act did. It put a gun to Countrywide and other lenders to make bad loans, Don Luskin.
Larry, you're just not thinking in Washington terms. We've got Chuck Grassley, we've got Chuck Baucus. We need as many subsidies for homeowners as we have for their farmers.
Let me tell you right now.
Another point. We're very likely to do exactly what Don Luskin said we shouldn't do, which is to heap more subsidies on the housing market right now. In my opinion, one of the reasons this bubble was created in the first place was that we over-subsidize housing. Let's not lap on additional tax subsidies to this industry.